Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's going on, guys? This is Brinks Trades live for another week of breakdowns. Can you guys hear me? I have some crazy background noise today, so if y'all are hearing that, let me know in the chats, and I will move my direction or move my location to a quieter place. Yeah, man. So where's everybody calling in from? Usual stuff. Again, if you can't hear the background noise, let me know in the comments too, so I can go ahead and change locations. All right, so we got about 15 people on the call. You know, I usually wait till about 20 minutes in. All right, give me 1 second. I'm gonna remove myself, and then hopefully we can kind of quiet this background noise a little bit. Give me one. All right, so we're back. I'm outside today. You know, it's a beautiful day where I'm at, so why not take it outside? So if y'all can hear me, let me know. But again, you know, I'm Brinks Trades, so the resident indices analyst for the Trading Nut podcast. Hopefully it's less background noise out here. I'm outside, so you might hear some cars or whatever. But again, it's summertime. You got to enjoy the day. So, again, resident indices analyst for Trading Up Podcast. Been trading for about 10 years. Started out in Forex, made a journey to like Forex indices, then made the full out transition to futures, where I currently trade most of my trades now. Funded over $1 million in prop firms with Apex, funded over $1 million in Forex prop firms at one time as well. So, been around the block when it comes to trading. So, what I want to do now is just kind of hop on and, obviously do the breakdowns for dollar and the indices, but then also start touching on a little bit more futures. I think what's going to happen is I'm going to try and transition this call to more of like a futures kind of oriented pod or stream, I guess. So I will start talking more about the futures, currency futures, which are very similar to a lot of the Forex stuff that we already are kind of familiar with. Um, so yeah, if you guys have any questions at all while I'm getting everything pulled up, feel free to, jump in. Yeah, let's go ahead and get it going. All right, so what I want to touch on first is NASDAQ. I'm sorry, dollar index. So we know that we always start with dollar because if we understand where dollar's going, then we can kind of figure out where everything else is going. So let's go ahead and look at dollar first. And so last week coming into dollar, what we wanted to see here was really price kind of trade up into this old imbalance here. And so just to kind of paint things in a higher kind of lighter, higher time frame, we've been in really just this consolidated range pretty much for the majority of the year, right? So we've been bouncing back and forth between 106.68 and 100 in this kind of range here. So we kind of have to, whenever we're in a consolidation on the daily, we have to kind of go down to the lower time frames to kind of get a better idea of daily structure. But just even if we go up to the monthly time frame, we've traded into this old imbalance here. We've really consolidated here, ran up. So long-term view, like over the next few months to a year, we probably will see a bearish dollar, right? It's kind of what I'm thinking. But how do we kind of take that into an action that's, usable for like this week or next week, right? So let's hop down to the daily time frame. And really, over the past few weeks, past few days, what we wanted to see price do was really trade up to this old imbalance here and really start to attack, sell side and lower lows here down. And so that's exactly what we've gotten, right? So going into next week, what I'm going to be looking for is, since we took out our long-term target here, I'm really looking for, us to continue down to this level here at 101.95. It won't happen all in 1 week, I'm sure, but it will probably take a few weeks for everything to play out. So what I want to see here is price really just continued on, onto the way to this level. So what I'm looking for, let me get rid of this. So I really want to see price trade back up into this zone here. The first half of the week, and then really find some reason to continue to go short, right? So I want to see the market really continue on to our overall target here. Which is going to be that 101.95. And so with that in mind, we are going to have to kind of stay tuned for that. But ideally, that's what I'm looking for a long-term target. Again, pullback level. Best case scenario on a pullback level would be this 103.71 level, but ideally somewhere in this range where I'm going to be looking for price to continue to go short. that 103.2 level is going to be where I think dollar could probably potentially run to continue on that with that short trend. So with that in mind, since we're going to be bearish on the dollar, we're probably going to want to be bullish on one indices, but then also as we start to talk about more of the currency pairs, currency futures, which I'll run through those today, probably euro futures and pound futures. We're going to probably want to see those go bullish as well, kind of for the opposite. So if you guys have any questions at all, feel free to hop in. If you guys can hear me clearly too, also I'm outside, so my Wi-Fi is a little different. So if you guys can hear me clearly, let me know. But also, let's go over and hop over to NASDAQ. That's what everybody's here for. So NASDAQ, what we wanted to see this past week is we called out a few different things, right? And so I said, coming into this last week, we were at this kind of moment of indecision in the markets where we could call prices to go higher and go or lower, right? And so when you have kind of like moments like that, it's really best to kind of let the market play out. In addition to the fact that we had a bunch of news events going on last week for FOMC, NFP, right? So this wasn't really ideal trading. It's also the last week of the month. So there's a lot of moments here that we probably wanted to stay away from as looking for opportunities to trade. But going into this week, we have a little bit more decision in the markets and where we're going. So starting the weekly time frame, we've fully broken structure. Whether you wanted to see this as a break in structure or this level, we've really pretty much broken that market, and really we're looking for potential short term, at least in the short term, a bearish market, right? So hopping out of the daily time frame, we came back up to this old BISI, which was on a weekly, this old weekly fair value gap right here. And as the week really progressed, we traded up into this, retested consequent encroachment of that gap, and then pretty much just fell over, right? So we also filled another inverted fair value gap. I'm sorry, another fair value gap right here, which is this overlapping. This is really what we call a balanced market, right? So we have buyers and sellers in the same zone. So we wanted to see the market continue to drop and continue to go lower. So with that being said, we have pretty much a full-on short-term bias, bearish bias here. So what I want to see is how the market really responds to that. So I'm going to be looking for this to continue on, right? We're going to be shorting for a while, right? So ideally, target for this week is what I'm going to be looking for is this zone right here. Our short-term target for this week. It might not happen all in 1 week again, but I'm looking for the market to really create some type of imbalance or fair value gap for the first few days of the week, first day of the week, and then really trade back into that and continue on with this bearish bias. So again, because the markets are closed, we haven't really formed that lower half of that imbalance. So it could be higher, it could be lower, but I'm just going to say I would like to see the market trade back up to this range here at 18,750. So awesome, cool. And then continue to go down. So this is where I want to be looking for the overall target. This is the fun part. So I was telling my students this over the past week is that, when we're in a bull market and we're just making higher highs, like this is kind of scary trading to me, right? Because I really don't, you have to be very conservative. You can't really map out where you think the market's going to go. You can't really project, right? Because it's just consistently making higher highs. There's nothing to really shoot for targets on the downside. When we have a bearish market, this is fun stuff because we can see, clear targets on the way down. We have something to aim for, and we can continue to move down. So ideally, what I'm going to be looking for is for the market to really run to this gap at 18,223, and then continue. Once it hits here, obviously reevaluate to see if we are breaking back into bullish structure at this point. But, really asking ourselves, what's the overall target? What's the overall draw for the week? And I think this is going to be it. So ideally, we continue on to go down here. We'll know, obviously, the first couple of days of the week whether we are right in that bias. Again, if you're one of my students, you kind of know what we want to see on Mondays. I try not to trade Mondays unless it's a very special news event. news week that I might look to take a trade on a Monday. But overarching, just sit Mondays out, kind of get the idea of the flow for the week, and then Tuesday, Wednesday, Thursday, really kind of hammering down and really looking to make my trading days those days. So, so ideally, we'd like to see the rise for the beginning half of the week, and then really just continue to go lower. So, it's gonna be fun to watch that one play out. Same thing on S&P, I'm sure. Yeah, same thing. So this is a very clean break market structure. So I actually called out that I wanted to see prices rise to this level. And I thought that maybe this kind of being bullish market structure going from last week, if I just backtrack, go to the daily. Yeah, so when I saw this, I thought, hey, maybe we could run to this gap right here and then continue to go down. Oh, sorry, this is actually Dow Jones, not S&P. We'll touch on S&P in a second. So I thought, maybe this was kind of signs for the overall market for it to continue to rise up and go higher, but we didn't get that, obviously. So what I had called out here was this 4-hour imbalance fair value gap for the price to really run to this and just kind of be flat, right? Because we wanted to see what happens once we hit this target. Do we fall over and go lower, maybe in line with that bearishness that we were seeing on NASDAQ, or do we, is Dow Jones kind of like our leader in the market and really kind of letting us know what the market's going to do? Dow Jones and S&P, right? So kind of using last week, obviously, as a week just to kind of see what's going on. Obviously, we ran to this gap right here and then pretty much just ran over, right? We broke market structure and fell down. So what I want to see here really is for the market to run back. It's going to be a bigger zone. Get rid of this. It's going to be a bigger zone, especially since we don't have lower end of the fair value gap yet. But I want to see the market really run to this level here and then continue to go down. So ideally something like this. The market runs into that. And then jump into the 4-hour time frame really quickly. I mean, same idea. If you want to kind of narrow this zone in, it would be something like this. Right, so ideally, market runs up here, goes down. I don't envision us coming all the way back up here again, until we probably transition back up into an uptrend. Obviously, we know the indices are long-term investment vehicles, so we know that, eventually the market's going to make new highs, right? That's just the point of the market. But in this short-term bearish cycle that we're in, I don't see us coming back up here for a few reasons. When we talk about, if you're one of my students, oops, hold on. So you guys can't see my charts. Let me see. So y'all cannot see my charts. Okay, so you guys should be seeing US30 or Dow Jones now, I think. Yep. All right, cool. So basically what I was saying a few minutes ago is that our target really was this old 4-hour fair value gap for the week, because unlike NASDAQ, on Dow Jones and I think S&P, we really hadn't broken market structure. We were trading above all-time highs, or we were trading above this high here. And we really hadn't seen a break in market structure. So ideally, I wanted to see the market continue to go higher. Again, if you're looking at that weekly time frame, this is what we were having up until last week, right? So really had nothing to do but kind of go for a bullish market structure and really look for continued higher highs. And I also thought this might have been a good opportunity, a good argument for the market on NASDAQ to continue around and go bullish, right? Because we were sitting at like a very indecisive level where we could have went higher, we could have went lower. So again, using Dow Jones, using S&P as an opportunity to say, okay, maybe the market's going to continue to run higher. So what we actually got, again, if we let this play out, is we ran up to our target, the fair value gap. So if you were aiming for this as a target, probably hit. And then we continue to fall over, broke market structure, and traded back under this low that we have been kind of calling out, this previous high. So again, what I want to see here on NASDAQ is I want to see the market really run back up into this gap here and continue to go lower. As we talk about this idea, if you're one of my students, we'll talk about this idea tomorrow of breakaway gaps, right? This is going to be an example of one where I don't think the market's going to come back up and fill this. But ideally, I want to see the market really run up here. The initial level is 39,924, but somewhere between there and 40,215, the market to run back into the zone and then continue to go lower. We also might not get as high as that, but ideally, this is going to be my ideal level. We could just turn over and keep going on bearish now, but ideally, best case scenario, this is what I want to see. The hardest thing to pick in the markets is the high and the low point, but once you understand the trend for the week, it's easy to ride the trend. That's why I always tell people, like, your job is not to catch the highs and the low of the week. Your job is to ride from pullback level to target. That's always what the market is for. So Dow Jones, that's cool. So let's go down to the S&P. No? All right, cool. So that's not S&P. All right, cool. So Mad Investor says, "Peace, King. My second time catching you live. Keep doing your thing. I appreciate it." Short video credits is good night. Okay. What else is here? Okay, I think that's it. All right. So what I want to do now is kind of touch on US500 or the S&P. So again, same thing kind of applies here. Like we were trading. This is very similar to what we were seeing on NASDAQ. We're kind of at a very indecisive level. If we go to the weekly time frame, just bullishness, right? Like this is long-term bullish. Technically, we haven't broken structure on this yet. This is still technically a bullish market structure on the weekly. Daily market structure, though, right, is very bearish. So there's a couple of things that happened. We trading back up into two things. This old fair value gap here, and then there's also, if you zoom in, there's a volume imbalance right there from between this candle and this candle. So I kind of just see these as one big gap, and I'll mark all those things out. So came up into the zone after getting the broken market structure up here, and we really just kind of fell apart, right? So we, boom. And also there was this very small gap here after the broken market structure, so you might have been able to call it, but this was the kind of the safer play. And so moving forward, we're in a full bearish market right now. So ideally, I'm looking for short-term targets. I'm looking for price to really run to, ideally, get rid of this. Best case scenario, we're running to this low right here. If you guys know by now, I'm pretty conservative when it comes to trading. So I'm just going to say that low is going to be our target for the week. And ideally, what we want to see here is the market really run up to a level, let's say this. Yeah, this level or this level is where I'll be looking for price to really continue to go short. That 5,355 level and that 5,407 level. So one of those two levels is really where I'm going to be looking for the market to really run to and look to kind of short that, right, to kind of continue on with the daily trend. So yeah, so those two levels for S&P, but I am very bearish. Let me get rid of this so you guys are not confused, and this one too. But this will happen a few times a year, right? We'll have like a major market shift on the higher time frames. The last one was in like May, right? We had a bearish market and we kind of just rode that out. So, and that's pretty much where we've been at since May. Before that, I mean, it was like the beginning of the year. It was like beginning of 24. Actually, it was November. So this stuff happens in the market, and so one of the hardest things to do is predict when the market's going to change. Again, your goal as a trader is never to catch the top or the bottom of the trend, but just map out targets on where you think the market can go. If we go to, I'm gonna add a couple things in here. So this is going to be Euro futures, which is very similar to Euro USD, right? So if I have, this is Euro futures, the symbol is 6E1. And if you look at Euro USD, same thing. So it's pretty much the same thing, but I'm gonna have this open and up for you guys. And so I called this out in the group chat. It might have been my mentorship group chat, or it might have been the actual TickUps chat. If you're not part of TickUps, free community online, join it. I do a lot of breakdowns here. I give a lot of free game. Like, take advantage of it. It doesn't cost you a thing. So, hopping on to this, I called out that I wanted to see the market really run lower. I think, let me draw what I had. Yeah, so I wanted to see the market really rise up and kind of keep going higher. I didn't foresee us kind of diving into this gap. I wanted to respect this order block here and continue to go higher. But again, with NFP FOMC activities, we actually traded a little bit lower, right? And this is going to happen a lot. Sometimes your general idea on the market is going to be right. Sometimes your actual trade execution will be wrong. I didn't actually take any trades on Euro, but again, same thing. Like, you're not always going to be right 100% of the time about the entry, but you will be right about the market. That's why you protect your stops and you don't risk it all in one trade, right? That's not what we do. We're not gamblers. So again, the market traded down in this overall balance and then gave us what we were looking for. So ideally, I wanted to see the market really run to this gap here, continue to retrade here and go higher. And it just simply shot through here, right? So ideally for this week, what I want to see is the market really kind of come back to a premium or discount level here. So ideally, I would love for the market to really come back down to this gap. This is like the most perfect scenario, right? Like, I'd love to see the market do this and go higher. That's optimal. But what I really think is going to happen, if we are going to maintain a bullish structure, is I want to see the market run for this imbalance here. Yeah, I mean, it's about the same. So I'm really going to be looking for a best case scenario, the market to really come back to this at minimum 1.0855 level and trade down into that 1.0847 level on dollar. Really continue to go higher. I think this is our overall target here, this previous high. A lot of good structure here, right? We talk about the concept of this. All my students, I should draw this line. You guys should know what that is and what it's building right there. So let's go to pound futures or GBP USD. Same idea, right? So we know these pairs are going to be very similarly correlated, right? So ideally, what I want to see here is the market really just continue to go higher, right? And I thought they was going to respect this order block just the same, but it did not. So ideally, what I'll feel really comfortable about trading pound when we take out this high on the way to a kind of like a market structure shift. Oops. So this high is going to be at this high is going to be at 1.287, right? So ideally, what I want to see here is kind of overlapping fair value gaps, which is a good thing. So I want to see the market really run back down here and then really give us a reason to continue to go higher, right? So this is going to be the long-term target on pound futures, or again, GBP USD, pretty much identical to the same thing, right? The numbers are a little bit off, but this market structure is pretty much the same. So ideally, I want to see, this is going to be my like very comfortable level for looking for longs. If there is an opportunity to kind of go long in this range here, in this gap, then I will be looking to take it. But ideally, once we take out this high, I'm pretty much bullish until we get here. There's a couple other like levels that I'll be kind of noting. I don't think this will all happen in 1 week, right? But this level here is a target level, right? And then these highs here. So these are like smaller term targets that, like, if I have trades on, maybe I'll exit some of the position, right? but ideally, I'm looking for the market to come back to this high. So if you just kind of draw a discounted premium, yeah, so like somewhere around maybe this high. So yeah, so that's what I'm looking for on pound futures, which again, GBP USD. I'm really looking to be a buyer somewhere in this range, but definitely once we take out this high, I'm looking to buy. But 1.2743 to 1.2786. Ideally, we always talk about the idea of a fail-safe level, right? And so as long as we are staying and closing above this low here at 1.272, all of my ideas for bullishness are going to continue to be valid. Again, my students, if I draw this line, you guys should know what this is and what it's building. So again, taking things higher. So that's ideally what I want to see in pound futures. Now, I dropped something in the chat, and if you guys have any questions at all, feel free to drop them in the chat. He's okay. So someone said Chat GBT talked about me. What did Chat GBT say about me? That's kind of interesting. Wicks are fair value gaps too, from my understanding. Wicks are fair value gaps too, from my understanding. So wicks are liquidity markers. Some people call them PD arrays, liquidity markers. They have like, they're a good way to kind of measure what the market's doing. And I have like a bunch of kind of like tips for that. But overarching, they're not technically not fair value gaps. No, they have a premium and a discount level, or like a premium and a discount and a 50% level, but they're not fair value gaps. Different marker. So yeah, so hopefully that kind of makes a lot of sense. If you guys have any questions at all, feel free to drop them in. I'll stay on for a couple of minutes. I'm actually gonna turn my screen off real quick because I'm about to. I realize if I turn my screen off, you guys can't hear me. But if you guys have any questions at all, I'll stay on for a few more minutes. I'm gonna walk inside again. It's kind of getting hot out here. I'm sweating. And yeah, that's pretty much what I want to see. The last thing I'll talk about before I let you guys go or kind of take questions is, again, my whole goal as a trader is to be as transparent as possible. That's what I want to build my brand on. That's what I want to do, is kind of just expose a lot of the BS that's in this industry, and kind of replace it with validity, right? And replace it with like, just confidence that this is kind of an actual career path. This is a job that you can take, right? Like, this is not something that's just like a few people can do this, right? And so I was reading this article, and I talked about it in the Telegram. If you're not in the Telegram, that there was this article I saw that said something like the average American, and obviously there's people from all over the world, but I live in America, so the average American has about $10,000 in their bank account at any given time. And so what I want to do is, starting on Monday, I'm going to do an account build, and I'm going to have this all documented in my Telegram. If you're not in the Telegram, hey, I'll drop the link in here. But I'm going to do an account build with a $10,000 account and really see what I can take that to before the end of the year. I'll document all of this stuff. It'll be hooked up to a TradeZilla account so you guys can see the stats each day, whether I'm red, whether I'm green, how much I lost, how much I won, what's my ratio. On average, I usually, when I'm looking for 1 or 2 good setups a week, my ratio is about 66 to 70%, meaning I lose about 33% of the time, which is not bad, but it's pretty good. But it's not perfect, right? And you're never going to be perfect when you're trading. So ideally here, the goal is to show that anybody can have some money if you're disciplined and you can start to build an account, right? And obviously not everybody's going to be able to do that because they're going to lack the discipline. They're going to lack the emotional factors kind of maintain when trading. But it's something that I'm very passionate about, is how getting more people into the trading space. So just want to show that everybody can do it. And you don't necessarily need a prop firm to do it. You can save up and stack up over, course of a year and a half, 2 years, whatever, and find the money for that. So that's what I'll be doing. So if you are in the Telegram, follow me on the Telegram. I'll drop the link. I'm just turning my camera off. I'm not exiting the call, so I will stay on for any questions. All right, so I'm back. So back inside, clearly sweating. So looking at these questions real quick. G Web says, "Can you look at gold?" Man, okay, look at gold. Sandro Shapiro says, Sandro dot Shapiro says, um, 5K will be okay. I'm not sure what you mean by 5K will be okay. Um, And I guess me documenting this stuff does not necessarily mean that I will be going live and trading it. It just means that like I will be showing my results. I probably will find time to go live, but it won't be. It won't be. It won't be an everyday like me documenting going live stuff. Just right now, I don't have 100% of free time to like go live. When I'm live, I'm usually multitasking with some other things. So if I want to go live, then I kind of want to make sure that I'm giving you guys my full attention, can talk through things and stuff like that if you're in the call. So I don't really have I won't be able to probably go live for all of it, but I will try and do some of the days where I'm trading that account live. But it's just an account between now and the end of the year, right? To kind of see what I can build on a relatively small account, right? And ideally, the goal is to stack money over time, right? It's to build an account over time, so you don't have to worry about prop firms with an amount of money that most people can stack up over the course of a year or two, right? So um yeah, so that's all I got for you guys. I'll look at gold really quickly. Again, I don't endorse trading gold. Everybody loves it, but it's what it is. Weekly. So we're failing to trade above this long-term high, right? Here, this is kind of what I mapped out the first, like a while ago, I think back in May. So we traded through this high, but we're really failing to break this high. I mean, it's been 1 week, two consecutive, over the course of a month, but 2 weeks over like a month where we haven't been able to break through this high. We are still making higher highs though, which is something you can't really discount, right? So we are still continuing to make higher highs. Here, I just want to draw this out. This is very much a balanced market. I would say I would be looking for the market to really trade back up here. But with this being said, on the weekly, we are having a hard time staying above this level with multiple weeks failing to break through. So in theory, you should be bullish still, but this is not a high probability setup. I know someone's not going to. A lot of times people don't listen to me anyway, but then kind of do what they want to do. But this is not a high probability setup. If I was trading this, I wouldn't, because we just took out a long-term target. We're failing to stay above this target, even though we are getting signs of bullishness. Like the market very well, just as easily as the market could do this, right? It could also do this and just like shit, right? So this is not an ideal setup for me, at least right now where we're currently at. So I would stay away from gold, but I also don't trade gold regularly. Like I think there's so many other currency pairs that you can trade if you're going to trade gold. You could trade euro and just stack up on the contracts, right? I think people like gold because they think it moves very fast. But my thing is, at times I would rather trade a slow moving pair and just have more contracts on than a crazy volatile fast pair that's going to get me out of sync emotionally. So trading is already hard enough as it is. So at the end of the day, like even if gold is moving faster than Euro USD, right, you can still stack up enough contracts to the point where it's worth the same, right? So so I think the volatility thing is cool, but I think having a pair that you're trading it, you're controlled, that's the most important thing. So so that's my thoughts on gold. Again, I don't endorse gold. Again, this is not financial advice. This is just one day trader's view of the market. So hopefully you guys enjoy this, and yeah, follow me on Telegram. Here, I'll drop the link to the Telegram. And if you guys are interested, feel free to hop on. Oops, that's not the link to the Telegram. That is a link to the chat or the video we're all watching. Let me do that. And if you are interested in being part of the, well, I'm not sure what I'm gonna do in my mentorship. I'm trying to figure out when. August is typically my dead month. I don't think it's gonna be, at least the beginning part of August is gonna be. I'm still gonna be active in trading. If the markets just get choppy and I start getting chopped up, then I probably will like not trade the rest of August. But we'll see. Typically the markets are pretty slow and volatile, but we'll see what happens. Especially since I'll be trading currency futures and they're not necessarily privy to like the whole like some end of summer vacation thing, right? That's more of a US thing. So I am going to administrators. I'm gonna drop this link in the chat, and then let me drop this. I'm gonna drop it right here. It's actually back in the chat again. And then Francisco, guys, I trade a variety of things. I take SMC. I take a lot of stuff that I learned when I first started trading with the market maker method by Steve Morrow. A lot of people might not know about him because he was like the guy that was like big like 15 years ago. Like I've been around trading for a while, so it's like there's a lot of stuff that I take from a lot of different people. So I've had mentors, I've taken some like market structure stuff from a bunch of different people, man. If I went through all of the traders, then you guys would, your heads would spin. So hopefully that this kind of makes sense. And then if you guys have any questions at all, again, hit me in that chat, right? That's the Telegram tick ups, peace.